Steve, we're in a room full of big investors and sovereign wealth funds. How should they view the possibility of the U.S. defaulting?
Well, I was watching TV early this morning and seeing the updates. It's sort of somewhat difficult to imagine this is actually going on. It's a political standoff. I think the two parties are about $100 billion apart on freezing the spending levels. I think that could be negotiated. One of the other issues is whether people have to work and to get supplementary payments. And I think there's a position that could be resolved relatively quickly on that. So this is somewhat an issue of wills and desire to not blink. And the whole world is watching. And so I think it could be resolved. In the 2011 fiscal cliff negotiations, it actually got done a little late. And something like that is one of the numerous scenarios. I don't foresee a situation where there would be a default that speaks to the U.S. government paying principal and interest on a timely basis. If something were to happen, really as a miscalculation on the part of the people involved with the negotiations, I think it would hit domestic constituents in the U.S., which would put enormous pressure to have things resolved in a few days. So it's a bit of a nail biter, if you will, and we'd all like to see it resolved, and it all will be resolved. The question is exactly when in that time period it is.